Yeah, good morning. We can start today's class. Before that, can someone confirm me whether am I audible? Yeah. Okay. I hope you can just pass the message through the chat box whether I'm audible or not, please. Okay. That's a feedback that I'm audible. I hope you all are very safe. In a pandemic time, we can't expect more than safety. So I hope that. And as usual, it should be an sort of interactive session. So if you have any questions or any doubt or anything, any comments, you can pass that through the chat box. So that is the arrangement usually we are having. So having that, I'm going to start the today's discussion. The last time you would have remembered that we have discussed about the some session of the previous class, the first class, the prime duty of the directors and use of information and advice, and the directors' interested transaction and appointment and removal of directors, and solvency test. Of course, I have mentioned that solvency test, there are questions in the exams. So you'll have to keep in mind on the remember on the solvency test and its definition and all, and some statutory books and registers maintained by a registered company or the company, incorporated company. So these are the things we have seen in the first session. And in the second session, of course, we have started to look into the financial institution and regulators and licensing process of banks. Do you have any questions or anything to ask from these related to these topics? Then I can clarify that. Otherwise, I can move into the today's class. Any questions do you have? Okay, then I'll move to the today's section. Today, of course, the continuation of the last class, the second part of the last class. The second part of the last class, we have discussed about the licensing of the financial institution, and under that section, we have started with the licensing of the banks. Okay, so I think we have completed that. Today, we have seen the licensing of the licensed finance companies. So licensing of the licensed finance companies, who is the regulator of the licensed finance company? Do you know that who is the regulator of the licensed finance companies? We have discussed last class. Of course, the licensed bank, the Central Bank of Sri Lanka is the regulator. For the licensed finance companies, who is the regulator? Can someone send you answer through the chat box? Who is the regulator? We have discussed last class. Yes, of course. The Central Bank of Sri Lanka is the regulator of the licensed finance companies. And the licensed finance companies, the Central Bank or the Monetary Board of the Central Bank of Sri Lanka granting approval for a license to function as a licensed finance company, and continuously they monitoring the safe and soundness of the licensed finance companies. That is the regulatory part. Why they are doing the regulators? Why they are make sure that the finance company, each and every finance companies are safe and sound. What is the purpose? The main purpose is to safeguard the depositors of the finance company. If you see the central bank objective, the central bank has the two objectives. The first objective, maintaining price stability. The second objective, maintaining financial system stability objective, the financial system stability. Why they want to maintain the financial system stability in the sense, because to have a good economic system, they must have the sound and stable financial system. And in order to maintain the stable financial system, they want to maintain the safe and soundness of the financial institutions, especially deposit-taking financial institutions. Mainly there are two type of deposit takers or deposit taking finance institution in Sri Lanka. Who are they? Who are the deposit taking financial institution in Sri Lanka? Can someone answer me? Can you please? Who are the deposit takers in Sri Lanka or deposit taking financial institution in Sri Lanka? Come on, you have to be the active. You have to give an answer, then only it will give a feedback that you all have studied the topic and understand the topic in very well. So, there are deposit takers. Who are the deposit taking financial institution in Sri Lanka? Can someone? There are two type of institution. They are taking the deposits mainly. Who are they? Come on. Okay. There are two type of financial institution accepting deposits. One is licensed banks. The second one is licensed finance companies. These two institutions are authorized to accept the deposit from the general public. The mainly. Why I am using the word mainly? Because there are some other institutions which also mobilize the deposits from the members. For example, rural banks, cooperative rural banks, and Samurti banks, and thrift societies. These type of institution in a small scale, they are accepting deposits from the members, from their members. Other than that, generally there are two type of the deposit taking financial institution. The first one is licensed bank. The second one is licensed finance companies. The licensed banks can be segregated into two. What are the category? Licensed commercial bank and licensed specialized bank. So we need not to have that segregation. So we can just keep in mind. There are two type of deposit taking finance institution. First one is licensed bank. Second one is licensed financial companies, licensed finance companies. So today, and regulator is Central Bank of Sri Lanka is the regulator of both institutions. And today we are going to see the licensing procedure of licensed finance companies. The licensing of the finance companies, generally the license under the licensing is given under the the Finance Business Act number 42 of 2011. So this is the act governed by or governing the finance companies. Under this act only the monetary board giving the license to the finance companies. So this Business Finance Act is effective from the 9th 11 2011. So 2011 November 9th onwards, this Business Finance Act is effective. So before that, actually there's a Finance Companies Act number 78 of 1988. There's an act. So that act has been replaced by the Business Finance Act. So earlier, these finance companies are called as a registered finance companies. But after this new act, the Finance Business Act, then we call this act as a licensed finance companies. Under this act, all the licensing criteria is almost similar to the banks. Actually, there's a message from the IBSL. I just wanted to inform to you all. The next weekend there's no classes. You all may know the reason that due to the Christmas. So the next class will be the following week, not the next week. Next week is sort of holiday. Okay. Having that announcement, we will move into this section, the licensing of finance companies. So now you can summarize this slide. The idea: there is an act called Registered Finance, the Finance Companies Act, which was enacted in 1988. Then in 2011, that act was replaced by the Finance Business Act, and now the licensing are given under the Finance Business Act, and this licensing criteria is almost similar to the banks. So these finance companies has to have as sort of similar activities to the similar requirement for in line with the banks. So, who can engage in a finance business under the Finance Business Act? A person licensed under Finance Business Act can engage with the finance business. So, other than that, a person exempted from the Finance Business Act, then any bank licensed under the Banking Act can engage in the financing business. So, a person or a company licensed under the Finance Business Act can engage in the finance business. First one. The second one is any bank licensed under the Banking Act can be engaged in the finance business. And second one is any institution other than a finance company exempted under Section 76A of Banking Act. Actually, the 76A of the Banking Act saying that it's about the licensed specialized bank. So under that, a licensed specialized bank can engage in the finance business. So that day we have discussed what are the difference between the licensed commercial bank and licensed specialized bank. What is the main difference? The maintaining current account and foreign currency transaction. Those two are the main differences between the licensed commercial bank and licensed specialized bank. So this section 78A deal with the licensed specialized bank. So it is also allowed to do the engage in business, finance business. And a cooperative society registered under the statute of the provincial council. Actually, the cooperative society, cooperative rural banks, so such societies can be registered under the cooperative commissioner or cooperative development department or the provincial council cooperative commissioner department. So that is they can do the finance business, and any other institution exempted from the application of Business Finance Act. So if there is any leeway, they can enter into the finance business. So these are the people can engage in the finance business. And what is finance business? The next question will arise, what is finance business? Because the earlier we say that, okay, these people can deal with or engage in the finance business, and the next question will arise, obviously, what is finance business? This is, we have discussed in the last class also. The business accepting deposit and lending of money or investment of money in any manner whatsoever, and the lending of money and the investment of money in manner whatsoever. So basically accepting deposit and lending that money as well as investing. Those type of business are called finance business. So if you want to mobilize a deposit, you have to have a valid license from a regulator, especially the Central Bank of Sri Lanka, to accept the deposit. Any questions you all wanted to ask? Yeah, there's a question that if any licensed local bank need to launch a new branch, or they want to inform central bank. Obviously, because that is one of the direction issued by the Central Bank of Sri Lanka long ago. If any bank want to, domestic bank want to open a branch in any place, they have to get the approval from, actually not inform, they have to get the approval from Central Bank of Sri Lanka if the banking branch or outlets. And in that case, they have to send certain information to the Central Bank Supervision Department of the Central Bank of Sri Lanka. Under that, the Bank Supervision Department will evaluate, okay, whether it is feasible and profitable for the bank. Then by analyzing those things, and they will analyze the requirement of that area, the banking requirement of that area. All sort of things will be analyzed by the Bank Supervision Department. Then they will grant the approval to the particular domestic bank. Okay, you can open a branch in a place X or place Y. So that is definitely they have to get the approval from Central Bank of Sri Lanka, particularly the Bank Supervision Department. If it is a finance company, recently the finance company, the Department of Non-Bank Finance Institution issued similar type of direction to the finance companies as well. So now, earlier it is not a procedure, but now the finance companies has to obtain the approval from Central Bank of Sri Lanka to open a new branch. So that is about opening new branch. Okay. Then the other one is actually basic requirement for licensing. Okay, now we have discussed, okay, what is the finance company, who can engage in the finance company business, and then what is finance business, and now what are the requirements they need to fulfill for a licensing. First one is the applicant company should be registered under the Companies Act number 7 of 2007. Number 7 of 2007 Companies Act, they have to register. So that's what we have seen about some very important features of this Companies Act in the initial period of this topic. So the first class, basically the first and second class, we have discussed about the Companies Act. So under that Companies Act, applicant company must be registered. That is one requirement. The second requirement, it should be a public listed company. Okay, so most of the finance companies, still there are some companies are not comply with this requirement, second requirement, but now it is very compulsory. If there is any new company, if they wanted to register a new company, that company should register under the public or should be a public listed company. Public listed company means it should be listed in the Colombo Stock Exchange or any stock exchange. And the third one is not a company limited by guarantee, or private company, an offshore company, or overseas company within the meaning of Companies Act. CA means Companies Act. So it should be a public limited company, but it should not be the private company or guaranteed company, or offshore company, or overseas company. It should be a public listed company. And the fourth point is having a minimum capital as determined by the Monetary Board. Actually, there are time to time the Monetary Board announce a minimum co-capital. Co-capital in the sense, sort of, there's a calculation, separate calculation for the co-capital. So, and under that calculation, they should have the minimum co-capital. Actually, currently 1.5 billion is the minimum co-capital requirement for a finance company. 1.5 billion. So I think they have to increase that requirement as per the central bank requirement from 2021. Earlier it was a requirement from 2021 January onwards, it should be 2 billion. Then 2022 it should be 2.5 billion. I think now it has been deferred due to this COVID situation. But that is anyhow they have to reach to a 2.5 billion co-capital level. So this if any company wanted to apply for a new licensing, they must fulfill this minimum co-capital requirement. So these are the basic requirement for the licensing. It should be a registered company. It should be a registered company, and it should be a public listed company, and not guarantee. And it should not be a guaranteed or private or offshore or overseas company. And that particular company's capital, co-capital, should be more than the minimum requirement determined by the monetary board. So these are the basic requirement for a licensing. And key document, what are the key documents we have to give for a licensing is, the first one is duly filled application. So they have to, there's an application form. They have to give the application to the particular application, and certificate of incorporation. That is, we know that if we registered as a company, the registrar of company will provide or give a certificate of incorporation for the company, those which companies are registered. So that certificate of incorporation, and confirmation from the auditors on availability of co-capital. Okay, we are saying that there should be a minimum co-capital requirement. It should be currently 1.5 billion. So there should be a confirmation from the auditors. There's a co-capital, availability of co-capital equal to minimum requirement. An article of association of the company, and latest form filed with the registrar of company on the registered address, list of directors, and annual return, etc. So they have to submit those documents, affidavit and declaration of the director as per the given format. Actually, central bank provide a format to the fill by the directors for affidavit and declaration. They have to make some declarations and on this. So these are the documents they have to give for a licensing. And other than that, there are some more information: organization chart, and operation and manual, and feasibility report. Feasibility report in the sense, okay, if the company going to start with the finance business, okay, what are their expected target customers, and what are the business they are going to engage, okay, whether that business is feasible or profitable. Those type of feasibility report they have to give it to the submit with the licensing. And projection of the deposits. So okay, if the company started and they are targeting this area, and they are targeting this type of customers, okay, they have to, based on their targets, based on their plan, they have to give what are the projection of deposit, what are the lending and other operation and profit and loss account. So they have to give for a first 3 years period what would be the projection. So there should be a sort of clear projection for the company's business. Other than that, board of directors assessment of the ability to comply with the direction, rules issued under the Business Companies Act or Finance Business Act, Finance Companies Act or Finance Business Act. So actually, time to time under this act, the Central Bank of Sri Lanka issue the directions and rules. So they have to give, okay, board of directors has the ability to comply with this direction. There are corporate governance directions are there. Minimum capital adequacy directions are, minimum capital co-capital requirements are there. Capital adequacy requirements are there. There are several requirements. So they have to have, there should be an assessment to ability to comply with those directions and regulations. And finally, the audited financial statement for the last 3 years financial year. So they have to give the projection for next 3 years. They have to give last 3 years financial statement for to the audited financial statement they have to give. So these are the basic requirement they have to give, or basic documents or key documents they have to give when they are applying for a licensing of a finance companies. Any doubt or any questions? So the application form, certificate of incorporation, confirmation of the auditors for the availability of corporate co-capital, article of association, latest form filed with the registrar of companies on the address of the address and list of the directors, annual returns, and affidavits and declaration of the directors, organization chart, operational manual, feasibility report, the projection for next 3 years, and board of directors assessment to ability to comply with the direction and rules issued by the central bank under this Business Finance Act, and again the audit financial statement for the last 3 years. So there are, when you are seeing this, you can observe that there are several documents they have to give to obtain the Finance Companies Act, because it is why there are such a stringent policy, why they are the central bank imposing such a stringent policy, such a strict documentation to get a license, because they are deal with the general public deposits or money. So they are going to mobilize more deposits or more money from the customers. So for that, the central bank has the responsibility of safeguard the customers' interest. So to safeguard the customers' interest, they have to ensure safe and soundness of the finance companies. In order to ensure the safe and soundness of the finance companies, they are asking more and more documents and information from the applicant to open or to grant a licensing for a finance company business. This is the summary. So do you have any questions? Okay, these are the key documents and the licensing process. Of course, the last time also we have seen the licensing process. So what will happen is there are some steps. First one is with all these documents, those who are applying company has to give a duly filled application to the central bank. The director of non-bank financial institution, they are handing over. So when they hand over that, the director of non-bank financial institution, he will make he has to make a recommendation on the application. So make that recommendation, they will call for an information, and then they will examine the applicant and its group of companies and their financial strength, and they are currently from where they are getting the loans and credit facilities. All sort of information will be examined by the central bank, particularly SNBFI department, and any other entity which has substantial interest or significant management interest on the applicant company. An investigation to assess the sustainability. So these type of information will be assessed by the will be gathered by the director supervision of non-bank finance, SNBFI supervision of non-bank financial institutions. Okay, so that is one of the department in the central bank. So they will just he will just collect the information from the all sort of information. So not only the particular applicant company, also the group companies, related companies, group companies, and any other companies which have substantial interest or significant management interest on the particular applicant companies. An investigation to assess the sustainability. Because if you see that in Sri Lanka, some people, not all the people, some companies, they apply for a finance business, finance company, to open a finance companies, and they get the license, they open the finance companies and mobilize the deposits and grant the loans to the related companies. That is a common issue we are facing. So when they are granting loans to the related company, then they can grant a lower rate, lower interest rate. And sometimes those related companies are not repaying to these funds. So ultimately, this is the general public fund. So they have to repay to the general public. So that's the reason we are the central bank collecting information not only the applicant company, also the group of companies as well as what are the other companies which have substantial interest or significant management interest on the applicant company. They are collecting all the information about that company, and this is sort of investigation. They are doing sort of investigation, okay, whether the particular applicant has the ability to do the finance company's business. That is one. And then assessment of sustainability. Before going to that, if you all have any questions, I can answer. Do you have any questions? Okay. Then the licensing process, the main other thing is the assessment of suitability. I say that, okay, once they have received the application, they are collecting all the information. Then they will assess the suitability. What are the suitability? Validity of the documents. Because when they are submitting, the company submitting the application form, sometimes companies may submit some forged documents, or some are not audited or reliable document. So first they will check the validity of the documents. That is the first one. The second one, then they will check the financial status or history of the applicant. That is the most important. So financial status, what is the financial status? Whether the applicant has a good track record in the past. So they will check that information. And qualification, experience, financial standing and suitability of director, CEO and key management personnel. KMP means key management personnel. It's in the third blood. If anybody want, you can write it. Actually, I did not give the abbreviation. The KMP means key management personnel. So they will check the qualification, experience, financial standing and suitability of director, CEO and key management personnel. Actually, we will study who are the key management personnel. Generally, DGM level, AGM level, CRO, CFO, those type of people will call as a key management person. So they will, the central bank will analyze the qualification, experience, whether they are suitable. Another thing is adequacy of the capital and ability to raise the adequate capital. Here there are two things we have to evaluate. The central bank has to evaluate from an applicant. There are two things. One is the adequacy of the capital. That is the minimum core capital requirement. And other one is the ability to raise the adequate capital. Because the time to time, central bank will increase the minimum core capital requirement in order to strengthen the financial institution. Because generally the financial institution's strength is measured by the availability of capital. Why it is so? Why they are measuring the strengthening of the financial institution by the capital or capital adequacy ratio? Because generally the capital gives the cushion to the financial institution to absorb any unexpected losses. For example, if the NPL are increasing, the NPL means non-performing loans are increasing and there are huge losses incurred through the credit risk. At that time, those losses should be, the company should be, or finance company should be able to absorb those unexpected losses. In order to absorb those unexpected losses, the company should have more and more capital. When they are having more and more capital only, they can easily absorb these unexpected losses. That's why after this 2018 and 2008 and 9 financial crisis, global financial crisis, this Basel Accord also got revised, and the Basel Accord mostly importantly require more capital should be having by the financial institution. So adequacy of the capital and ability to raise adequate capital is most important thing, and they will consider when they are assessing the suitability of the applicant. And ability to cover all obligations, liabilities in conduct of finance business. So when they are conducting the finance business, there may be liabilities and obligation, whether they have the ability. So that sort of things they will analyze, and finally they will analyze, assess the ability or to comply with the provisions of business finance business act and any direction given they are under. So there's actually the mistakes in the spelling mistake in the provision. There are two numbers in came, or it's appearing in the provision word. Between that, there are two numbers. If you want, you can delete it in your tute. So ability to comply with the provisions of Finance Business Act and the whole direction given they are under, so they will assess. So these are the assessment process. Do you all wanted to ask any question from me? Anything related to assessment of the suitability of the finance business or finance company's business? So licensing process, we see that now we have seen that, okay, what are the assessment, what are the criteria they will assess, and then next we will see the licensing process. So the license will be granted if applicant has the required co-capital. Okay, the final decision they will take, if the applicant has the required co-capital, they will receive, and they will receive the application. They will gather the information about the not only applicant and the group companies and everything, and then they will process, and there are certain criteria. They will do the assessment based on that criteria, and finally the final decision they will think about if the applicant has the required co-capital. That is the first thing. Then second thing, if the applicant has the ability to comply with the directions and rules applicable to licensed finance companies, LFCs, and the issuance of a license is not detrimental to interest of its creditors and other stakeholders. And finally, the monetary board may grant provisional approval subject to such terms and conditions. The similar thing we have discussed in the banking license as well. I think you can remember it, because in the licensing process of the banking also, once the monetary board satisfied that, then first the monetary board will grant the provisional approval for applicant to open a bank or to start a bank. Likewise, here also the monetary board may grant the provisional approval subject to such terms and conditions. Okay, by analyzing and assessing the ability and everything. Okay, they will say first they will give, okay, provisionally in principle they will say, okay, we are granting provisional approval, but before starting the business you have to fulfill these conditions, and you come back to the proper license. So by assessing, so what are the main thing? The co-capital, ability to comply with the directions and rule, and issuance of license is not determinant to the interest of creditors and other stakeholders. By satisfying that, the monetary board may grant provisional approval subject to such terms and conditions. So once they grant the provisional approval, then there are requirement to it will move to the permanent approval for a licensed finance companies. Generally, they may license the provisional approvals may not extend the validity period of provisional approval exceptionally. Other than exceptionally, generally they will not extend the validity period of provisional approval. So what is the validity period of provisional approval? The validity period not exceeding 18 months from the date of provisional approval. So if they give the provisional approval, they generally give 1.5 years, 18 months to comply with all the terms and conditions. So within 18 months period, they have to comply with all the terms and conditions stipulated in the provisional approval. So actually the thing is, when they are generally this provisional approval period may not exceed. So the may not the validator extended. The validated period should not extended. Exceptional is under other than exceptional cases. Generally it is not. And no commencement of the finance business under the provisional approval. This is the most important thing. If a person obtain the provisional approval, he can't open the or start the business, finance business next day. Actually, under the provisional, with the provisional approval, he can't start the finance business or finance company business. Actually, they have before that, before the starting, he or she, the particular company has to fulfill the requirement and should not state that it has been granted provisional approval unless required by the law. So once they get the provisional approval, they can't say that we got the provisional approval and based on that they can't start the transaction or anything. They can't influence it unless it is required by the law. They can't. They should not state that to others, the general public. And the license may be granted if satisfied with the applicant operated under the provisional approval. So provisional approval, there are terms and conditions. Based on the terms and conditions, how much they are satisfying to that terms and conditions, they are granting the approval. The license is granted. Provisional approval is not binding the Monetary Board to grant the license. Same thing we have seen in the Banking Act. Once a provisional approval granted, it doesn't mean that the Monetary Board will grant the license necessarily. They may not. They may reject. Because if there are some conditions, terms and conditions stipulated in the provision and approval, so if it is depend on whether the company fulfill those requirements. So based on that, the license will be granted. And so the provisional approval is not binding on Monetary Board to grant the license. And Monetary Board to issue the notice to public or issuance of the license to such applicant to carry the business way. Generally, you can see that if any new finance company's license is granted, then Monetary Board issue a press notice and saying that to the general public, saying that okay, we have granted a license to this client for to run the finance business, so you can engage with that particular company in the finance business. This is the licensing process. Okay, before going there, is anybody wanted to ask any questions in licensing process? It is better if you ask the questions and clear. Actually, this is more or less more than the exam. You can get some idea how this licensing process working and how the companies, finance institutions are getting licensing and how that process is working. So you can get some idea. So if you have any questions or any comments, please ask from me. Okay. Then we will move that the use of word finance. Actually, I just like to mention to the students that there are questions on these slides. They say that what are the restrictions? They are generally in question paper they are asking what are the under which act they can engage in the finance business. So under which act it is prohibited everybody to use the word finance. So we have to mention is the Finance Business Act prohibiting. And licensed finance companies should use the finance, financing, financial as a part of its name. Generally, if any finance companies, licensed finance companies, you can see that there's a word called finance in their name, whichever finance companies. So it is must. They have include the word the finance in their name. And any other person, if they wanted to use the word finance, they have to get the approval from the monetary board. Without monetary board approval, they can't use the word finance in their name. And monetary board has the power to publish the name and address of any incorporated entity and director thereof, unincorporated entity and members thereof, and individual who use the word finance without approval. So this is most important part. If anybody does not have the approval, does not obtain the approval from the monetary board, they can't use the word finance. If they use the word finance without obtaining approval from the monetary board, then the monetary board has the power to publish the name and their address to the public. Okay, these entity and the directors and unincorporated entity and individual using the finance word in their name without getting the approval from the monetary board. They have the monetary board as that authority. So you have to keep in mind. So every finance company should use the word finance. Other than finance companies, there are some restrictions. If they wanted to use the finance, they have to get the monetary board approval. Other than that, the monetary board has the authority to publish or authorized to publish their names and address and saying to the public they are using without our approval. Then you may ask the question that, is there any exception? Definitely there are some exceptions to do that. Any company of which the monetary board requires to use the term finance. If the monetary board, you ask that, as we say that any company in which monetary board requires to use the word term finance, then they can use the word finance. And the association of the finance companies, for example, the Finance Houses Association, the association representing the finance companies, they can use the word, this is an exemption, they use the word finance. And registered trade union of the employee of a licensed finance company, they can use that word finance. Any company, if usage is recognized by law or international agreement, then they can use the word finance. An exclusive provider of education or consultancy service, finance education and financial education. Likewise, if an exclusive provider of the education and consultancy service, in that circumstance also, they can use the word finance. Other than that, they can't use the word finance. So you may, I think you can understand that these are the requirement of the licensed finance companies, licensing part and using the name of the finance and exemptions. So now next we are going to move to the finance leasing business. Before that, if you will have any questions, please ask. Any questions related to the licensing of finance company business or finance business, you can ask the questions. Otherwise, what I am normally doing is I am asking the question from you all. Generally, if it is a physical class, definitely I am, if you all don't ask the questions, I am asking the questions from you all. But since it's a virtual class, there are some restriction, of course. Any questions if you have, you can ask. Okay, I think you'll have understand the licensing procedure. That's why you don't answer, assuming that you'll have understand fully. And I am moving to the finance leasing business. So this is another kind of institution or finance institution running in Sri Lanka. the finance leasing business or leasing, specialized leasing companies. So for the finance leasing business, of course, they have to obtain the approval from the central bank or monetary board. The central bank, not monetary board, of course, central bank. So before going to the licensing procedure of the leasing companies or leasing businesses, I'm going to ask a question from you all, just a very preliminary question. In Sri Lanka, there are some finance companies, there are some leasing companies. So what is the difference between a finance company and leasing company? Generally, the finance company is also doing the leasing business. That is something different. But there are some institutions which is exclusively engaged in the leasing business or leasing companies which are named as a leasing company. So the license has been granted under the Leasing Act. So they can do the leasing, finance leasing business, and the special license for the leasing, finance leasing. So what is the difference between the licensed finance companies and specialized leasing companies? What is the difference? Can anybody answer? This is basic understanding. When you are in the financing field or finance field, you must know what is the difference between the licensed commercial bank and licensed specialized bank. Or what is the difference between the basic difference between the finance companies as well as leasing company? What is the basic difference? So it's a very particular difference is there. Can someone answer? What is the difference between finance companies and leasing companies? Okay. Yes, there's an answer. Licensed finance companies can accept the deposits and leasing company only can conduct the leasing. Yeah, the answer is the finance companies can accept the deposit from the public, general public. But the leasing companies, they can't accept the deposit from the general public. That is the main difference between the licensed finance companies and specialized leasing companies. Another important message I can tell you that there are only 3 specialized leasing companies are available in Sri Lanka. Most of the leasing companies are now converted into finance companies. And only 3 companies are remain as a specialized leasing companies in Sri Lanka which can't accept deposits. But they can engage the leasing business. So where they are getting the fund? They are getting the fund from other financial institutions, maybe bank or maybe other, they can issue the debentures and all sort of other form, they can get the funds, but they can't accept the deposit. That is the main difference between the finance companies and leasing companies. Okay, that is a basic idea. Why I am asking is because that is a basic concept you must understand before starting the finance leasing business licensing process. Otherwise, you will make confusion. But why you are granting the licensed finance companies and licensed specialized leasing company license, 2 different licenses, because the main difference is accepting deposits. Understand? Okay. What is the finance lease? It is a commercial agreement. Lessee in the sense those who are the customer or borrower will select an assets. It may be human, it may be vehicle, it may be a large value software. And the lessor means a finance company will purchase that asset. And again, lessee will have use of that assets during the lease period. And lessee will pay a series of rental or installment. So this is generally the financial. But at the latter part, of course, the ownership, if it is mentioned in the agreement, after paying all the installment, the ownership of the equipment asset may transfer to the lessee. So there is no hard and fast rule to transfer. But if there is any clause mentioned in the agreement, then the ownership will transfer. So it is a commercial. You have to understand that it's a commercial agreement. Lessee will select the assets, and lessor will purchase that assets and give it to the lessee, and lessee will use that assets for a particular period, and for that period, lessee will have to pay a series of rental and installment. Here, there is no interest. There is no word called interest. Actually, the installment. This is the sort of finance leasing. The lessor will recover a large part of all the cost of the assets plus earn interest from the rental paid by the lessee. So what is in the rental from the lender? From the rental part, the lessor will recover all the cost plus his profit or some sort of interest. So actually, in the lease agreement, you can't find the word called interest. They won't mention, but they will mention as a installment. But initially, the lessor will cover the interest or the sort of profit from the lease render. So the lessor will recover a large part, and lessee has the option to acquire the ownership of the assets. At the end of the period, lessee has the option to acquire the ownership of the assets, paying the last rental or bargaining option purchase price. So there are different agreements. And the leasing company is the legal owner of the asset during the duration of the lease. If the lease vehicle or something, if you see the registration book, you can see absolute ownership. Maybe a bank name or any finance company's name or leasing company names will be appear there. If it is a lease vehicle, because absolute owner, he is the owner of the asset. It's a particular leasing company or lessor. The lease has the control over the asset, providing them the benefit and risk of the ownership. So the lessor has the lease has the control over the assets, providing them the benefit and risk of economic ownership. So these are the finance lease and finance leasing, some features. And before seeing to the Finance Leasing Act, we are just seeing what is finance lease and what are the features of the finance leasing, and the registering the finance leasing business under the number 15 of 2000, the Finance Lease Act, FLA, the Finance Lease Act number 56 of 2000. Which is this act is effective from 2001 August. The amended Finance Leasing Act, this act has been amended several times in 2005 and 2007 as well. Several times in the sense, 2 times this act has been amended. So any specialized leasing company, so this license has been granted under this particular act. The Finance Leasing Act number 56 of 2000. Any questions you all wanted to ask? Any questions or comments? Okay. The contractual parties of a finance leasing. There are 3 contractual parties in the finance lease. The person who transfer the right to possession and use of the equipment under the lease to a lessee. Lessor. The person who transfer the right to possession and use of the equipment under the lease to a lessee. The person who has the ownership and he transfer the asset to the lessee. He is called lessor. And lessee, a person who acquires the right to possession and use of an equipment under the lease agreement. Lessee. The lessee is the customer. We have already seen lessee is the customer. The lessor is the finance company. The leasing company is who has the ownership. Who is providing equipment or asset to the lessee. And supplier, a person who supplies the equipment for a purpose of finance lease, except a lease where he or she applies such equipment. Okay, there are three parties involved in a contract of finance leasing: lessor, lessee, and supplier. Any doubt on this? The lessor, we can simply understand lessor is the person who company who provides the lease facility to others, or they have the ownership and provide the asset to use by lessee. And lessee is a person who acquire the right to possess and use the particular equipment. And supplier, of course, third party. The third party in the sense he is the person supplies the equipment. If we take a typical example, for example, if a person X going and buying a vehicle and getting the fund from the leasing company. So the person X called as a lessee, and the XY, he is getting ABC company, he is getting vehicle from the ABC company. That ABC company will be the supplier, and he is mortgaging, getting leasing facility from the one of the leasing company. Then that particular leasing company will be the lessor. So there are lessor, lessee, and supplier. So these three parties are involved in the financial leasing contract. Any doubt? I think these are very. If you see that generally, I'm explaining the class. I'm covering the class by using 30 slides, but today I just included 48 slides because this is very straightforward things and nothing too much explain. If you understand the concept, that is most important thing. And features of the finance lease: an agreement between the lessor and lessee for the possession and use of the lessee. An initial period of not less than 1 year period. These are the features. An equipment specified by the lessee. An equipment either provided by the lessor or lessee supplier. The payment by the lessee to the lessor for possession and use of the equipment. No terminable by the lessee once accepted the equipment. He accepts the equipment, he can't terminate it. These are some features of the lease business. So the possession of and use by the lessee, an initial period not less than 1 year, equipment specified by the lessee, and equipment either provided by the lessor or the lessee supplier, and the payment by the lessee to the lessor for the possession and use such that is the rental payment, and not terminable by the lessee once accept the equipment. These are some features of the finance lease. And the lease amount to be calculated amortizing the cost of the equipment, and recoverable terms condition after accept the equipment by the lessee, to return the equipment by the lessee to the lessor after the finance lease period in the absence of a purchase agreement. This is, you will have to have idea. In the lease agreement, actually, It is not compulsory that end of the period the equipment should be transferred to the lessee. Actually, in the lease agreement, generally it is included. After paying the last installment, the ownership is automatically transferred to the lessee. If the clause is included in the lease agreement, but if it is not included, then the lessee has to return the equipment to the lessor. The return the equipment by the lessee to the lessor after the finance lease period in the absence of a purchase agreement. If there is no any purchase agreement included in the lease agreement, then it has to be the equipment has to be returned. That is the important thing you have to keep in mind. And not a hire purchase agreement under the Consumer Credit Act 29. It doesn't include the hire purchase business and may or may not provide the extension of the initial period or for the purchase by the lessee of the equipment after the expiration of initial period or period extended. These are the clauses, some features of the finance leasing. Any doubt or any questions? Okay, then we will move into the finance leasing business. What is finance leasing business, which we have discussed already? They investing money for a provision of equipment under the finance lease. Here, equipment mean any tangible assets which has economically useful life of more than 1 year and does not include land. Any improvement made to the land other than fixtures and immovable property attached to land, which can be removed from the land without substantial destruction to such fixtures and immovable property. So this is the definition. This is sort of definition for equipment which are involved in the finance leasing business. And eligible to register. So now we are moving to we have seen the some as general aspect of the finance leasing business. Now we are moving to the eligibility to register. A licensed commercial bank or licensed specialized bank can be registered under for the licensed leasing finance business. Actually, I have mentioned you all that only 3 companies having dedicated to so the license granted under specialized leasing companies act. But even a licensed commercial bank or licensed specialized bank, they can apply to get the license to engage in the finance leasing business. Actually, the finance leasing business, they have to get the approval. So licensed commercial bank and licensed specialized bank get the approval, and licensed finance companies can get approval. Actually, in Sri Lanka, if you see the data, more than 55% of their total portfolio is represented by the leasing portfolio. If you see the finance company sector as a whole and divide the portfolio into product category, more than 55% of their portfolio represented by the leasing product. It's a highly concentrated. That's why most of the people doesn't have the understanding the segregation of finance companies and leasing company, because the banks are getting involved in the leasing business, finance companies are getting involved in the leasing business, and again specialized leasing companies are getting involved with the leasing business. So that's why it's the eligibility. A licensed commercial bank or licensed specialized bank get involved, and licensed finance companies can get involved. And if it is a sort of standalone leasing business companies, if they wanted to register a company incorporated under the Companies Act number 7 of 2007 of Sri Lanka, having minimum issued and paid of capital as may be prescribed by the Minister of Finance and Planning, then they can get the approval. Actually, in Sri Lanka, I think currently minimum capital requirement is 400 million. to start a leasing company. So if they have comply with the minimum capital requirement, and if they comply with the minimum capital requirement and other aspect, the registered company, then they can apply for a the license. The submission of the license, applicant should furnish feasibility report and proposed business plan. Like the finance companies, we have seen that, okay, if they wanted to apply, they have to give next 3 years forecast. Likewise, here also feasibility report they have to give. If it is a license finance, leasing finance business and finance leasing business, and they have to give the feasibility report as well as the proposed business plan. And detail relating to finance lease business expected to be carried out, and financial projections, lending and other operations, and profit and loss for the first 3 years period, and application fee as prescribed. So these are the things they have to submit it with the applicant. And the key documentation: manual of operation, certificate of incorporation, certificate of commencement of business, and the certification of registration under Companies Act, the latest form filled by with the registrar of companies regarding the registered address, list of directors, and the annual return, etc. License issued under the Finance Business Act or LFC as an LFC, or under the Banking Act as a licensed bank, an article of association. This is the fourth one is applicable only to the banks and finance companies, an article of association. So these are the documents they have to give for the registration. And the list of board members classified as executive, non-executive, and independent, etc. Detail of the relationship of board members in other companies and other CVs of board of directors, affidavits and declaration by the board members and CEOs, experience and qualifications of a senior management, detail of 10 largest shareholders, and detail of the group organization chart, audit financial segment for the statement for the last 3 years period, a certified copy of the auditor's confidence letter to the board of directors of the company at the compliance of the audit unless a new company, the financial statement as at the date of application. So there's a lengthy list of requirements. So the key document they have to provide when they are getting license for a leasing business, finance leasing business. So if it is the standalone finance leasing company, they have to have minimum capital requirement. Otherwise, bank or finance companies can also apply to get the approval to engage with the finance leasing business. So these are the so we have seen the submission of application and key documentation for registration. So if you see that registration process, the direct non-bank supervision consider the application. So once they submitted and the information submitted, then with that they have to have the key documentation and information has to be submitted as a second step. And the third step, the carry out the investigation. The central bank, the non-bank supervision department will carry out the full investigation about the particular applicant and group companies and related parties and everything, and then satisfied as a fit and competent, then they register the applicant and finally issue the certificate of registration. Here there is no provisional approval issues. So these are the general procedure for registration of a license finance leasing business. Every person registered under Finance Leasing Act is referred as a registered finance leasing establishment. So these are about the leasing companies, finance leasing companies, business and act. Any questions you all wanted to ask before moving to the other sections? Any questions? Okay. Just to recap, so far we have seen the licensing process of three main financial institutions. The first one is licensed finance companies. The second one is, first one is licensed bank. The second one is licensed finance companies, LFCs. Third one is the leasing companies, registered leasing financial establishments. So these three main financial institutions are regulated by Central Bank of Sri Lanka. Under these three institutions, the first two institutions, licensed bank and licensed finance companies, can accept deposits. They are called as a deposit-taking financial institutions. The third one, of course, the main difference, they can't accept the deposit from the public. But if they wanted to engage with the finance leasing business, they had to get the approval from the central bank. So for that, there are two types. Existing banks and LFCs can obtain the approval, as well as standalone or specialized leasing companies or approval also can be obtained from the central bank. But now there are only three specialized leasing companies are existing in Sri Lanka. So this is summary. Now we are going to move into the different regulatory framework, which is called insurance companies. Insurance companies are not regulated by the Central Bank of Sri Lanka. That is the main thing you have to think. You have to keep it in mind. The insurance companies are regulated by the Insurance Regulatory Commission. Okay, so different super regulatory authority. That day we have seen a graph. There are four regulatory authorities. One is central bank. Under central bank there are institutions. One is licensed bank, licensed finance companies, leasing companies, primary dealers, and all. And another second one is the Insurance Regulatory Commission. Under Insurance Regulatory Commission, all the insurance companies are regulated by the Insurance Regulatory Commission. Okay, so we are going to discuss about the licensing part of the procedure of insurance companies. Before that, we will have a sort of definition. What is the definition for a insurance? What is the definition? There are several definitions, but this is generally accepted. A contract between the insurer and the insured, whereby the insurer agrees on the basis of the premium paid by the insured to indemnify the insured in case of loss due to insured risk. Okay, there are three aspects get involved: insurer and insured assets, or any insured risk. Okay, not asset, insured risk. So insured can have a contract with the insurer in case if there is any loss incurred, the insured risk that will be compensated by insurer. And law governing the insurance industry, the regulation of the Insurance Industry Act number 43 of 2000 as amended in 2007, 2011 and 2017. Regulations of Insurance Industry Act. The licensing of the insurance business. No person shall carry on the insurance business unless such person is deemed to be registered under the Insurance Industry Regulatory Act. A regulation of Insurance Industry Act to carry on such business. So he also, like banks and finance companies, other than obtaining the approval or the license, no person can carry on shall carry on the insurance business. The second one is a person registered as an insurer shall not carry on the any form of business other than insurance. Okay, so they have to particularly they have to carry on the insurance business. However, an insurer may, with a prior written approval of the Insurance Regulatory Commission of Sri Lanka, IRCSL, carry on any financial services business which is ancillary or associated with the insurance business for which a registration is obtained, general or life. Okay. If you actually here there are three main things has been explained. The first one is no person shall engage insurance business other than unless that person has the license obtaining from the Insurance Regulatory Commission under the regulation of Insurance Industry Act. That is the first point. The second point is a person registered in the insurance shall not carry out any other business other than insurance, but there are exemptions. So with the prior written approval from the Insurance Regulatory Commission of Sri Lanka, they can engage with the financial service business which is associated with the insurance business. So these are the main features related to licensing of insurance business. And after satisfying the suitability of the applicant to be registered, IRCSL shall register a company as an insurer and license specifying a subclass of class or subclasses of insurance business authorized to carry on. Of course, once they satisfy Insurance Regulatory Commission, satisfy the application, then they can grant the license mentioning what are the main classes of insurance they can carry out and what are the subclasses of insurance business. We will see that what are the subclasses available, what are the main classes of business. Main class in the sense long-term insurance business, other one is general insurance business, and subclasses there are other subclasses. And license shall be kept in all times to as a principal office or place of the business and be made available to the inspect by the any member of the IRCSL, its director general or any other person. So like the bank, he also license should be keep in the its principal office or place of businesses. Every insurer shall within 3 years of being insured with a license to have itself listed on the license stock exchange. So it also within 3 years they have to the particular company has to list in the stock exchange. So these are the licensing procedures. An insurance business, of course, actually by considering time, I'm just going fast. If you have any questions, just ask. Okay. Insurance business. There are, I have mentioned that there are long-term insurance business as well as general insurance business. These are main category, main class. The long-term insurance business is generally we call as a life insurance business or long-term insurance business. Now we are calling as a long-term insurance business. It's a contract of assurance on human lives where the payment of money is assured on death or happening of any contingency depend on human life. So this is called as a long-term insurance. There are subclasses: life, annuities, permanent health, capital redemption contract, pension policies, linkage long-term, linked to long-term. So as we see in the earlier, when they are granting the license, and the first plan we have mentioned, when they are granting license, they are specifying the class or subclasses. So accordingly, here the main class is long-term insurance business. Under that, there are subclasses. So in the license, they have to mention, okay, this particular company can engage this type of main class business and subclasses. And the second main class is general insurance business. All the insurance business that does not fall within the long-term insurance is called general insurance business. Under the general insurance business, there are subclasses: marine insurance, fire, motor vehicle, employees liabilities, insurance, miscellaneous. There are more category in the subclass category in the insurance business. So here insurance business can be categorized into two, and it has to be several subclasses. This has to be mentioned in the licensing. Any doubt? If you have any doubt. There's a question, of course. The sir, can another company which is not another industry start an insurance company? Yeah, of course, if they have fulfilled the requirement of the insurance business, and if they and the particular company should not engage with any other business, there may be there can be a group of companies which may involve with other businesses, but the particular company, if they don't engage with other businesses, they can of course start with the insurance business. But if a company, for example, if a company that is that company the particular company involved with the production business, for example, okay, they are producing some rubber products, okay, tires and all. So if the particular company itself, if they wanted to start the insurance business, that is not possible. But if that production company form another group of company, and that particular company is going to be exclusively involved with the insurance business, then they can start with the insurance business. Okay, I think you would have got the point. And that in the written, with the written approval, they can involve with any finance related company, that particular insurance company. That is the requirement. Okay, I got the feedback. Okay. Then requirement for the registration of the insurers, the application fee and annual license fee, paid up share capital of 500 million for each class of insurance business. Each class means there are two classes: long-term insurance business and general insurance business. For each classes, at least 500 million should be there, and a deposit with the general treasury for a long-term insurance business and for a general insurance business, an appointment a principal officer possessing a qualification associate or fellow of the Chartered Insurance Institute or equivalent academic or professional qualification with not less than 5 years post qualification experience in insurance related activities and managerial level. Fit and proper criteria are applicable for a principal officer. So these are the main requirement for registration of insurers. Understand? Okay. A person engaged in the insurance business. So there are several people get involved in the insurance business. First, insurer. A person registered to carry out insurance business under regulation of Insurance Industry Act and includes a company, is called insurer. An insurance agent, which is an important thing. I think that is the person generally approach the general public to and motivate the people to make an insurance and provide services. A person registered as an agent with an insurer or a broker who solicited or procures insurance business for such insurer or broker in consideration of a commission. So generally insurance companies provide commission for an insurance agent. And again, insurance brokers, there are other type of companies who function as an intermediary for placing of insurance business for on behalf of the insurer, a policyholder or and proposer insurance relationship with the insurer of the receiving a brokerage or commission. He is also getting commission of brokerage. So generally there are issuer and insurance agent and insurance broker. Finally, loss adjuster, a person who has specialized knowledge in investigating and who is assessing loss arising from insurance claim. So these are the 4 category of people or persons engaged in the insurance business. And insurance agents and brokers, of course, we heard about it. And any person acting as an insurance agent shall register with the insurer or broker as an insurance agent. No insurance broker or agent, no insurer or broker shall appoint as an insurance agent any person who is already registered as an insurance agent with any other insurer or broker. Registration of insurance broker as a subject to annual renewal. Acting as an insurer or broker insurance agent without registration and any other contraventions of the provisions of the Act are offences. Punishable offences. So these are related to the some ideas about the insurance agents and brokers. And the use of word insurance, no person other than a registered insurer or broker agent shall without the written approval or use part of its name or title or description the word insurance or any other derivative. So here like finance or like bank, using the word insurance also prohibited other than obtaining the approvals under certain company. This is not applicable to association of the insurers and brokers. So these are about the insurance business and licensing, of course. In the exam point of view, there is no much questions in the insurance section, but it is for a knowledge purpose. You can just have an idea about the insurance. Any questions you all wanted to ask? Otherwise, we can move into the other sections. This is now again I can just reorder that there are first regulator Central Bank of Sri Lanka, and under that there are 3 licensing procedure we have seen: bank and licensed finance companies and specialized leasing companies. Then other regulator Insurance Regulatory Commission of Sri Lanka, where the insurance companies are regulated. Under that we have seen the licensing procedure of insurance. Now we are going to move into the third category, Securities and Exchange Commission. Under the Securities and Exchange Commission, there are stock brokers, stock dealers, stock exchanges, and unit trust management companies are regulated by the Securities and Exchange Commission. So they are mainly regulating the capital market players. So the licensing, the Securities and Exchange Commission of Sri Lanka grants license to any person to carry on the business as a stockbroker or stock dealer, and any corporate to carry on the business of stock exchange for a specific period. I just wanted to mention that I think those who are downloaded the slides from the the group, you won't see these slides, of course, because this is I just included at the last minute because to complete this section. So I will re-upload this presentation again today evening, so you can get downloaded that also. And no body corporate or individual shall use the word stockbroker, stock dealer, or stock exchange unless such body corporate or individual has been licensed. So this is generally these. Securities and Exchange Commission of Sri Lanka grant the license for stockbrokers and stock leaders and dealers, and nobody, stock dealer or stockbroker can use the word unless they obtain the approval from the Securities and Exchange Commission, SEC. And stockbroker, there are some definition, of course, you can just read and get it an idea. Any individual or body corporate engage in the business of buying and selling of securities on behalf of investors in return for a commission is called stockbroker. But stock dealer means any individual or body corporate engage in the business of buying and selling of securities, or in the dealing or trading of securities, or underwriting or retailing of securities, but shall not include an underwriter. Okay, so this is called as a stock dealer, and SEC has specific term and condition to be complied with by the company individual wishes to be the stockbroker and stock dealer. We will move into the unit trust management companies. Unit trust management company intended to operate a unit trust shall obtain the license from the SEC to operate such unit trust. No person shall use the word unit trust unless he or she has been obtained license to operate as a unit trust. No person shall issue, publish, or to be issued or published as an explanatory memorandum or advertisement inviting the public to invest in unit trust of a unit trust unless such person is a unit trust management company and he has obtained prior approval from the Securities and Exchange Commission for the contents and issue of the publication. So without the SEC approval, they can't, without SEC approval and without the member of the unit trust management company, they can't publish or inviting the public to invest in their units of the unit trust company. And these are some small category in the financial institution which representing very low market shares. But anyhow, you can get some ideas about these things. And there are two broad categories of the unit trust. Of course, everybody knows that open-ended fund and closed-ended fund. The open-ended fund, of course, anybody can come at any time and leave any time. There is no any restriction. But closed-ended fund, of course, there are some maturity date, so there are some restriction to enter and exit the fund. So these category you can just read and get some idea about the open-ended and closed-ended funds. And actually, if it is in the unit trust, you will may see in their website. If you visit to their website or advertisement, you can see several type of funds they are maintaining: gilt edge funds, high yield fund, and growth funds, as well as balance fund, money market funds. Gilt edge funds is, of course, they are investing in the government securities, treasury bill, treasury bonds, and repurchase agreements, repos. So relatively risk is low, but the return also low. And high yield funds, of course, invest in the fixed income securities, provide the much higher returns. Maybe debentures, corporate bonds, commercial papers, and all. They may invest and get the things. And growth fund objectives provide the capital appreciation. A major part of investment in the equities, and smaller part is fixed income securities. This is the growth fund. And balance fund, of course, they are keeping the balance between the providing regular income as well as capital appreciation. And money market fund, of course, recently it is very popular money market fund, and they are providing high yield rates to the they are providing high return to the customers as well. They are investing in the short-term fixed income securities, generally deposit commercial papers, repos, and treasury bills, and they are providing even the Financial Times and Daily Mirror. You can see that money market funds returns they are making an advertisement. These are more attractive to the among the general public. So these are some of the type of funds they are maintaining by the unit trust companies. And the finally we can move to that. We have just see the central bank related company regulated companies, and insurance regulatory commission regulated companies, and securities and exchange commission regulated company. Finally, we are going to see the cooperative societies. Cooperative societies, of course, at last there are three type of cooperative societies are regulated by the Cooperative Development Department or Cooperative Development Commissioner. The first one is cooperative rural banks and theft and credit cooperative societies, other financing societies registered under the Cooperative Act. So Cooperative Development Commissioner Department. And initial registered under the Cooperative Societies Act of number 5 of 1972 and regulated by the Cooperative Development Commissioner or Provincial Cooperative Development Commissioners under the applicable licensing, auditing and issuing regulation. Actually, these are generally registered under the cooperative structure, and they can involve in the finance business as well in the small scale. Generally, they are accepting deposit from the members and public, lending to the members, and investing the excess fund. So somebody can think about, so anybody can start the bank as a under the cooperative development society or something, rather than operating a or getting the license from the monetary board or the central bank, because monetary board and central bank there are high requirements and the stringent regulatory policies and all, but comparably the cooperative rural banks and regulations are less and easy. But it is not the case, because that's the main difference is cooperative rural bank and theft societies, and these societies can engage only with the members generally. So, and it is a small scale deposit taking institution. So we can't compare the cooperative societies with the large scale banks as well. So this is about the cooperative societies. So you will have to keep in mind there are four regulators: central bank, insurance regulatory commission, securities and exchange commission, and cooperative development department. So these under these regulators there are different institutions are doing engaging in the financial business, and this financial business under the central bank, the banks, licensed banks and licensed finance companies representing the larger share of the financial system. So this is all about the licensing process of this financial institution. I think I have completed the licensing process now. Uh, Now we can in the next class I can start sort of so these all about the preliminary understanding about the financial institutions and company formation and licensing the financial institutions. Now we can move to the some specific area on the financial institution management. I think I'm planning to start risk management of financial institution. The risk management of financial institution, of course, there's a 20 marks question is always you can see questions related to the risk management of financial institution. So if you study the risk management topic, you can secure the 20 marks in the exam. So as I always mention, the purpose of this study is two. First is getting knowledge. The second is sitting exam. So and for the exam point of view as well as knowledge point of view, the risk management will give more understanding or more gain to you all. So having the note, if you have any questions I can answer, otherwise we can move to the next class. Any questions you all wanted to ask about the licensing and licensing of finance institutions, or any companies act or form a registration of companies or anything? Okay, if you don't have the questions, I'll wind up the class today. We will so next Saturday there is no class due to the Christmas. So we will meet on the following Saturday. Okay, bye.